Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. Today, I have with me Josh Schlessinger, President, CEO, and co-founder at Continue On. Josh, thank you for joining me today. How's it going?
My pleasure. I'm happy to be here. Thank you for having me.
Awesome. And it looks like you are in Boca Raton.
Yes, sir.
So basically, in my mind, that's the fancy side of Miami, right?
Yeah,
So we have Miami,
we're about
Fort
an
Lauderdale.
hour north.
Uh,
Miami, Fort Lauderdale, Boca, Palm Beach
Boca.
area.
Yeah, I had a conference in Boca last year. Well, I spent a lot of time in Miami as a child and got to see Boca back then. And then I had a conference in Boca last year. I had a lot of fun. It's a
Yeah.
beautiful area. So we're
Very nice.
recording March 27th, which I'm
Yeah.
guessing Southern Florida is already cooking.
No, we're still getting some of that good spring weather.
Okay.
End of May, June is when it gets hot and the snowbirds go back up north, and then
Okay, so
the regulars stay.
it's only
So
88 degrees and 100% humidity right now.
little cooler, but I know where you're getting at. Trust me, it's gonna get there soon.
All right. Right. We always give the guest the chance to give the elevator pitch. What is Continue On?
So Continue On. I'm going to start all the way from the beginning. So Continue On actually started as Claim Ride about 2000. We went live about 2017, and that started as we built a SaaS. Our idea was to build a SaaS platform that we could license primarily to auto insurance companies to sort of disrupt the rental reimbursement space, right? We were looking at the proliferation of Uber, of Lyft at the time, if you recall. I mean, maybe 2015, whatever that year was, when all of a sudden everyone's like, we're all of a sudden riding in strangers' cars, and it's this new concept. And we just for other background, we started. When I say we, it's my father and I. We started in the as an MGA in the non-standard space. And I'll go back to this later. My grandfather actually started in the auto insurance space in the 80s, Bristol West, which is now part of the Farmers Group. So auto insurance has been in my blood for 50 something years now. But we come from the non-standard MGA space, and we were sort of looking at the market and looking at the proliferation of Uber and Lyft and asking the question about, like, why are we not leveraging this technology in our offerings or in our solutions, right? Meaning, traditionally, your insurer gets in an accident, send them to one of the top rental car places. They have their enterprise has their ARM. They put you in a mid-sized car. Have a nice day. We were wondering, why are we not sort of leveraging Uber, Lyft in this situation? Do people really need to rent a car depending on where they live, how many times a day they drive? And so we went to Uber and Lyft, and at the time they had no interest in this space, right? They were still building their core business. I mean, that was still growing, and they had no interest in insurance. It was not top of mind. So because our MGA was doing well, we were able to leverage those resources and some of our revenue, and we went out and we built our own custom code backend system to deliver these rideshare credits, which started as virtual credit cards, right? So we were able to, through our platform, we can basically deploy a virtual credit card to someone who's on the side of the road, whether it's a one-time use or it's a daily use card, and they can put that card into their Uber, their Lyft app, be on their way. Or, instead of renting a car, if they're in an emergency roadside situation or an accident, get off the side of the road. Did several pilots with some national carriers, and we learned that it was not really something these guys wanted for a multitude of reasons. I think, especially in insurance, getting a claims department to adapt new technology is not always the easiest thing. I think some listeners will know exactly what I'm talking about.
Anything in any area of insurance to bring in something new is a slow, painful process. It's not just claims.
Exactly. So there was an issue there, right? Dealing with the actual carriers or the MGA's claims department. And then what we also learned through the pilots is just customers or insureds who, if you have a vehicle, you probably want a vehicle when yours is in the shop. Because I think we were so in it in our minds. My father and I, we are big Uber, Lyft users. Going out on a Saturday night, going to the airport, wherever we're going, we're going to use Uber and Lyft. So in our minds, everyone's using Uber and Lyft. And the mom who's got to go to the grocery store, drop her kids off. She would need hundreds of dollars of Uber credit, rideshare credits to get around. So that was one of the pain points. We also discovered, we started with a mobile application, and we realized, especially with maybe one-time use, you're asking someone to download an app, take a credit card. So after a year or two of these pilots and kind of looking around the marketplace, we realized this was not the way to go. And we started looking at it from, okay, what's another angle? And we said, maybe there's a play on the product side, right? Again, a claims department doesn't want to adapt the new technology, but if we can make the product side money and we can provide a service to your insureds, maybe there's a real benefit there for everyone involved. And that became our continued mobility product. And that's what we focus on today. What I focus on today, that's really what's building our business. And that specific use case is for these side of the road situations, post-accident, post-mechanical breakdown. What are we doing for that insured to get them off the side of the road? Traditionally, nothing, right? Your policy may have a built-in roadside product that either was complimentary based on your carrier. Maybe it's something you're paying for, but 98% of these roadside providers are not doing anything to get the person off the side of the road. They're towing your vehicle, and traditionally they're saying, depending on the state and liability, maybe you can get in the tow truck. Nobody wants.
I would be shocked if they let you get
right, and nobody wants to get in
the
tow truck, right?
Yeah.
Or it's call your wife, call a friend, or use your own money and order your own rides here, call your own taxi and get off the side of the road. So what we did was we actually started this. We piloted it on our own MGA product in Texas. At the time when we had our Links Insurance Services, our MGA, we slapped it on there as an additional benefit to our customers. It was working. Customers were utilization was obviously it's a low frequency type product, but utilization was good enough that we saw there was promise there. It was a revenue generator for us. So we went out and we started meeting with other MGAs in the space. And over the last several years, we partnered with a bunch, and as of today, we're in, I think, operating in 8 states with over 300,000 policies in force. So we have about 600,000 drivers on the road today that are protected by continued mobility.
Okay.
And then that's sort of where we're at today. And I'll let you, I'll
perfect,
kind of fill you in some other stuff as we go.
That's a fantastic story. So the current state. So now it's not part of the claim, but rather it's a product that I'm getting for a couple bucks a month or whatever, or that it's getting that the carrier is providing it to me as
exactly. There's both methods, and today in the marketplace, majority of our partners are charging for it because most of our partners today are non-standard. But to your point, I am having several conversations with more national preferred players in the market who do look at it like the way you were pitching it is we include it, right? We eat the cost, we embed it into our policy. It's however they factor that in. And it's more of it's always a customer service play. But again, on that level, when you're talking about, a State Farm, a Geico, whatever, they're looking at like, we're not going to lie out and charge our customers something like this, right? We're going to give it to them. It's a differentiator and so on. So yeah, there's a few methods to distribute this.
And basically what they get is picked up by an Uber or a Lyft, covered directly.
Yes, and exactly, and it's not ordered for them. That's the other thing. When this concept first started, there were other providers out there, specifically roadside guys, who were doing like Uber concierge, where their operator was ordering you the ride. And we never want to touch that space because every time I talk to someone who was doing that, that is such a headache, right? You have to have your operator on the phone. You're trying to figure out where your customer is.
It's a headache for both sides. Yeah.
Right. I'd rather just give you the money, right? Because you may not be ready. Your operator may be on the phone and you're still waiting for the tow truck to get to your vehicle. You're still dealing with all these things. So it's like, no, here's your $50. Order at your convenience. You talk to the Uber, the Lyft driver. We're out of it. So
yeah, using an operator to do that, it takes the entire convenience of the Uber app. You might as well call a cab, right? So yeah, that definitely didn't make any sense. I do like the alternative to rental coverage, right? Rental makes sense for some people, but this definitely makes sense for some situations.
And it does, but I think that rental, that market is already so niche that to then segment it down to the people that maybe live in an urban area who don't need a car.
Yeah.
We were not able to monetize that properly. Meaning we had carriers say, sure, we'll pay you per play, right? Like if we have someone, we'll pay you another $5 on top of the whatever it was. And it's like, I can't make money. I can't run my business like that. We need scale. So we need more of a commitment holistically. And most insurers were not ready to do that because, again, a lot of them, they're not getting, until their customers, until the insured start calling in and saying, we need this, we want this, we need this, which again, I think is going to happen every year that goes by, right? This becomes more top of mind. This becomes more normalized in the marketplace. It will get there. But today, yesterday, we weren't finding that. And it wasn't enough of a pain point where our claims department, again, wants to adapt the technology, wants to pay us a SaaS fee, a monthly SaaS fee. So what we said was like, we own this technology, right? Proprietary technology that we built. We built these APIs. We're on Salesforce now, so we can integrate with anybody. And we have all these different integration partners, and I can go into that. We're partnered with Corpay. I want to give them a shout out. They're our credit card provider. So they provide we API into them. They provide us the virtual credit card that we then deploy through a web application to our customers. They can put that in their Uber, their Lyft app. And we're also partnered with Lyft. So we can issue direct Lyft credits into your account and bypass that whole experience. It just depends on the customer and what they, we give them the option, right? I'm sure as you talk to other guys in this space, we can't steer, right? That's why we originally started with the virtual credit cards. We want to be an agnostic platform because it's like when you get into an accident, your carrier may have a preferred relationship with enterprise, but they can't force you to go to enterprise. You may say, I had a bad experience 10 years ago. I'll never use enterprise again. If you want to go to Hertz, they got to put you down. Now, you may get a better vehicle or a better rate at enterprise, but the same concept with us is we never wanted to put anybody in that situation. So we started with the virtual card, and now the Lyft is an option. It's just an added option. It's easier if you're a Lyft user. God bless. You can choose that. But again, everything's built on Salesforce. So we have these APIs available to us to pipe in at different vendors and issue, whether it's issue cards, credits, whatever. That's one of the reasons we actually moved from the back. We had a back-end system, custom code that we built. And if there's any entrepreneurs out there, I can tell you, if you can find a stable third-party piece of software, like especially like a Salesforce, that's the way to go. Building your own back-end and databases and maintaining that when you're a startup. And I just want to put it out there. We didn't raise money. We funded this all ourselves. So we didn't have millions of dollars to just piss away, on developers, on coders to just sit there and maintain the system. So over time, we realized it was obviously an investment to move off that and to start with Salesforce. It wasn't nothing, but we realized as we started to scale, let's leverage Salesforce. We can leverage the stability, the security, and the potential integration. So that's been great for us.
Okay, so it gets me off the road, basically.
Okay.
It gets me home.
Yeah.
Is it as it existed now? It's a one-use thing.
So specifically, that continuum mobility product is.
Okay.
But again, our technology, to your point about rental, we can do daily benefits. Our system is set up where we can shoot you the next day. Let's say you were entitled to $50 a day for 7 days on your rental. We don't have to load 350. Our system's set up where we can put $50 and every day at midnight, you get to reauthorize another $50, or you get another $50 in Lyft credits. So that technology is there, that availability is there. Any carriers out there, you want to use this, it's there for you. We just haven't gotten it. That's just not where we're at in terms of the marketplace and what's needed. And by the way, so again, that's continued mobility. If you want, I can sort of talk about what I'm looking at potentially for the future with our technology and things like that. Yeah. So my next project I'm working on in very, very early stage, doing a lot of research and a lot of researching partnerships and the integration potential and the marketplace, is I'm trying to look at the homeowners renter space, specifically loss of use, right? What are we doing in terms of temporary housing for people? Flood, fire, a cat situation, right? Most carriers, some basically say, go stay in you can rent a house that's similar to yours and we'll cover up to X dollars, right? A lot of them are saying, and you gotta front, you gotta put your credit card down, you gotta sign an agreement with these guys, and you gotta write a check or whatever. Some carriers are kind of giving you cash up front, but what I'm trying to do is sort of make it a little more seamless where, for instance, I'm trying to work with Airbnb, right? Where I want to be able to, same way I'm doing Lyft credits, Can I deploy an Airbnb credit right to your phone, right to your Airbnb account? You make the reservation yourself, right? And it's different than cash because the carrier then has the opportunity to collect some of the breakage. For instance, I may call my adjuster, right, and say, hey, I found a like house. It's $5,000 a month. Maybe the house is $4,500 a month at the end of the day. Carrier's not getting the $500 back. But if I'm issuing you an Airbnb credit, you're only using the spend, right? So if I issue you $5,000 and you're using 4,500, that 5,000 is going back. $500 doesn't sound like a lot. You're dealing with a cat situation on scale, right? Again, this was our same pitch with rental too. It's the same concept, right? If I put you in a rental vehicle for $50 a day, that $50 is gone. If I give you 50 and you spend 48, 49, I mean, again, I know it sounds small.
No,
when you're talking about a national
if
player,
I've got 100,000 people using it.
Exactly. So again, still doing a lot of research. I come from auto. I have my 220 license, but I'm not an expert when it comes to homeowners and renters. So I'm trying to learn more about that space. And I should mention another subtle difference potentially is we underwrite continued mobility. That's our risk. My company, right? I mean, when we partner with the insurance companies, they're not underwriting that portion of that risk, right? That's us. For what I'm calling continued dwelling, but I was just describing, that's going to be the name of the product. I'm not at first interested in underwriting that because I don't have the expertise on underwriting, a $20,000 loss of use exposure. That's not what I'm looking at. I'm looking at it more of a technology play and being able to serve, better service the insurance company's customers in those situations. So that's kind of my next project I'm working on as we scale and grow continued mobility. And again, as you mentioned earlier, so today continued mobility is primarily distributed through the insurers, right? It's attached to the policy, meaning certain states it's a motor club product where it's billed with the policy, it's part of the policy, but in terms of regulation and compliance, it is outside. We have partners who actually filed it as a coverage. We have a partner in Florida. So this is there is a continued mobility approved coverage in the state of Florida, which to me is amazing. I know that was the coolest thing in the world when we got that approved, because again, we were the first to do this. So, again, depending on what states you write in and regulation and how you want to deal with the various departments, it could be a motor club, it could be an actual insurance filed product. But today, our primary distribution is partnering with the insurance company. They sell it as part of the policy. We do a rev share. We underwrite it. They're almost like getting a commission on the play, right? They're giving the customer an extra service. They're getting a little extra revenue. Everyone wins. What I'm looking to do now as we grow is also break into the roadside space, right? You have all these roadside providers out there working with insurance companies, but like I mentioned earlier, a lot of them are not including a continued mobility type of coverage with the roadside piece, right? They're towing your vehicle. They're going to bring you gas. They're going to jumpstart your car. But if you're stranded, if your vehicle's non-drivable, you're still in that same situation where, okay, you're towing my car, but what are you doing with me? And there's a couple out there that are starting to integrate and do some lift credits I've seen, but most aren't. And even some are doing old school reimbursement where they're basically saying, go take your ride, send us your receipt, we'll send you, who wants to do that? So there's a few forward-thinking roadside providers out there I'm talking to today where they're going, yeah, we should partner. We're going to integrate you into our process, right? And whether they take the risk, I take the risk, that's a different conversation. But again, you're still offering the customer a better benefit, a better experience when they're on the side of the road dealing with these various roadside situations. So that's sort of another direction I'm trying to go into. And I think we're making a lot of headway there. Another opportunity, which is kind of cool, is, so as I mentioned, we do this to the carrier. We've never explored an agency product, right? I'm sure you have a lot of agents, brokers, agents watching, listening to this. So what I'm trying to do, is position ourselves as sort of an added benefit to the agent experience. Meaning, a lot of these agencies, depending on the state, they charge agency fees, broker fees for the privilege of them selling you an auto policy, right? Like the customer they're still getting a commission from the carrier, but these customers, these insureds, they're paying a fee to buy a policy from these brick and mortar agents, right? And some of these forward-thinking agents are starting to say, well, look, we got to do more than just collect money because we're selling them a policy. We need to differentiate ourselves in the market. Certain states, especially non-standard, these brick and mortar agents, Some of them have 2, 3 in the same plaza, right? They don't have exclusives where you can be in a plaza and it's auto agency 1, it's a Subway, Boost Mobile, and then it's auto agency 2. I mean, I'm not exaggerating. And what they're looking to do is say, all right, maybe we can create sort of a benefit package within our agency fee, right? Where we're going to maybe give some extra stuff away, and we can, as sort of, it's marketing, it's an extra service, and that's another way for me to break into other marketplaces as well. So that's another distribution channel I'm working on today as well.
All right, so it's pretty cool. So you build the technology, and you're in the process of finding the different ways in which the different players in the industry can utilize it. So it's pretty
right.
Cool.
We built a platform that can store policy information. Basically, it's a mini policy claim system, and we have these APIs to deliver payments, credits, whatever you want to call it. So again, that's why it's my bigger picture. That's why I rebranded from Claim Ride to Continue On. Is we're not just rides, right? We could be whatever space, whatever sector of insurance or roadside or vehicle service contracts or whatever you're in. We're deploying payments in real time, right? We're getting rid of the old school reimbursement idea. We're getting the customer their money up front, and you're leveraging certain controls on those funds. So, like I said earlier, you're not just giving $50 in cash. You're giving it through these credits or these cards, so that if the customer doesn't make the full spend, you receive that breakage. So again, it's not limited to auto or homeowners or renters. There's a ton of opportunity down the road. I mean, I can only focus on so much at one time as a single owner operator, but I believe there's other opportunities outside of just auto and homeowners as well.
Yeah, it seems like a win-win. Better customer service while saving the carrier some money.
Oh, and just leads me. This is also something I'm working on. It's interesting. So when you talk about customer service, so today, I don't say we're old school, but you call. It's an 800 number when you're on the side of the road, same way you would call your tow truck or whatever. But the next step is to automate that process, right? My goal is to have a QR code on the deck page of an auto policy. Customer picks up their phone, hits the QR code, takes them to a web, a landing page on a web application. They put in their last name, zip code, phone number, whatever those data fields are to verify coverage request. And then they get their $50 or whatever that dollar amount is to their phone to order their Uber, their Lyft, whatever. Because today you call in. So that's also another reason why I moved to Salesforce, is to leverage, again, those APIs so that we can pipe into a REST API on the insurer's side, right? So whether it's their homegrown system or it's a third-party policy system they're using, if they have a REST API available, which in 2025, if you don't, you're probably on the wrong system. I know there's probably guys out there who are still using the AS400s.
Oh yeah, the carriers are investing heavily in their technology, but yes,
as they should. And again, the ones that I'm trying to work with and the more forward thinking are moving in that direction and are building these REST APIs. And it's not just for me. I mean, there's a multitude of ways that there are other vendors and partners can use these REST APIs. So my goal is to be able for the customer to hit that landing page, put in their information, and then pipe into the insurer's REST API and verify. All right, last name, first name. Do they have continued mobility? Yes. Awesome. Hit Salesforce. We generate our API to the card provider or Lyft, and then this all happens in milliseconds, as you know, right? And then that customer then gets their benefit in real time without talking to a human. We'll still have our call center as a backup. Technology fails. We all know that at certain times. But the goal is to really reduce as much friction as possible. And again, I can keep talking about this. This leads me into my next thing we're working on. So Corpay, our credit card provider, is what I'm also trying to do is I'm trying to reduce friction in real time on the side of the road through wallet provisioning, right? So we provide the virtual piece of plastic through a web app, and you got to move that card information. Well, what I'm trying to do is leverage wallet provisioning, where when we send you that card, there's going to be a button that says add to Apple Wallet, add to Samsung Wallet, Google Wallet, whatever. So when you open up Lyft or Uber, you're just selecting your Apple Pay and picking the Continue Mobility card to use. So again, that's more incumbent on my partners to develop that technology. Corpay's been amazing. They have the agreements with Apple and Google and all them. They're just building out the technology to be able to actually push those funds. It's almost like, when you buy an airline ticket now and you can just put it right in your Apple wallet.
Oh, it's so nice. Yes.
So now imagine you're on the side of the road and you can just do that the same way. And that's the next thing we're working on as well. So again, that's big for me is investing in the technology. Again, I'll say this openly, it's not just for the customer's benefit, it's marketing, right? The last thing I want to do is pitch an insurance company and look like I'm from 1995, right? That's not what nobody wants that.
It's okay.
So again,
they are.
But well, yeah, that's the funny thing. They're old, but they want me to be, the latest, which is fine. I want to be the latest.
They're
too,
working
obviously.
on updating. Yeah.
Yeah, absolutely. But again, telling if there's any young listeners, any entrepreneurs out there doing their own thing in their own field, but in technology and whatnot, just keep investing. Make sure you're just up to date as much as possible. Whatever the newest technology is, make sure you're leveraging that because it's changing so fast. And when you're out there, when you're marketing yourself, when you're doing these pitches, you want to be the latest. You want to have the latest technology. That's just we didn't start that way. And I'll be honest, that's a lesson I learned is we launched because we were self-funded, we launched thinking, let's get it out there. And as we sort of grow or as potential customers or partners ask us for things, we can get there. I don't think it works that way. I think you need to be there already. You know what I'm saying? I think you need to have that technology available so that you can say on the call, yeah, I can do that for you. Not, oh, we can talk about that. Oh, we'll build that out over time. They don't want that. They want it today. So again, I know that you can always read their mind and know what they want, but my point is just make sure you're the latest and the greatest, or else you're going to fail.
Well, the tech startup world is tough. And the tech startup serving insurance, right? My little pond of insurtech, you've got the combination of the difficulties of tech startup and the difficulties of incredibly slow purchase cycles. Right? They're like 2-year long at
absolutely. I deal with that too, and it's mainly and to the earlier point, a lot of it is their IT. It's not my IT. Right. I mean, we have I'm not going to say their name out, obviously, but we have a, I call them a partner. We haven't launched with them yet, but we have an agreement over a year ago. And they can't even program us into, because you have to, there's some things we do, there's some things they do in terms of programming continued mobility, right? Because if we're doing it through the relationship of an insurer selling it with their policy, they need to program us into their policy system, right? We're on their deck page. We're a part of their billing fee. We have a certificate that prints out with the ID card and the deck page and all that, et cetera, et cetera. It's not a ton of work, but based on sort of their size and scale and the stuff in their queue and what they're doing, you fall sometimes.
It is a ton of work when the core of their business runs on AS400s. That right, I will never forget. I grew up at Nationwide, and I went through a financial leadership rotation program. So I got to see behind the curtain a good amount and meet with a lot of leaders. And I remember sitting. This was 10 years ago plus, about 10 years ago, 10, 11 years ago. So I sit down with a marketing leader, and he says, I have never requested a change to our software and have the budget come back at less than $500,000. So like to change a comma kind of thing. And that's why they've been heavily investing in technology, but the carriers largely run on
that. And I so to your point, if I can piggyback off that story,
absolutely.
And I'm not going to say their name, but I am talking to a large national carrier, and one of the hurdles was, he said to me, this is a $250,000 to $500,000 implementation for us, and my brain exploded.
Yeah.
I mean, he said from start to finish, for me to put this together, for me to get it approved, for me to go through IT, all the steps. I said, to program a billing fee, to add our certificate and to add a PDF into your system to print out. So yeah, again, and that's why, to that point, I really do focus on a lot of more mid-market insurers who are more nimble, who see the value, who can push this through, who can get this going a lot quicker, and maybe have better technology. But yeah, I mean, it's to that point, it is mind blowing.
They're getting
I
better.
don't know if you want to call it bureaucracy or whatever the term would be at some of these places.
It's not even bureaucracy. They have immense technical debt,
Okay.
and that makes it incredibly hard.
That's a great way to say it.
And it makes it incredibly hard for them to make changes. Now, the good news today compared to, let's say, 15 years ago, is that they know they have to change. 15 years ago, they were very comfortable sitting with their old technology, and if it's still working, who cares, right?
Yeah.
And luckily, finally, over the last 10 years, we have seen immense investment in transitioning to newer systems. But those transformations are long, they're expensive, and they're also very hard to be 100% complete. So basically, like the new system goes live, but are we?
Oh, you're on that old system for 2 years, like running off policies and
exactly. Are we really able to like pull the plug on the old system? Well, not quite, right? Some policies are still on it, some claims are still on it.
Right, because the claim tail, you got the claims tail, so you're still, oh dude, I know.
Exactly. So it can take a very long time. And all of that creates complexity. And one thing that you pointed out is if IT has a year-long wait, right? If you're not at the top of the priority list, they have a year worth of work ahead of the
right.
It's like the dry cleaners, if such a thing. I don't use a suit anymore, but it's like the dry cleaners, right? The actual cleaning of your suit took 18 minutes. It's that 3 days of waiting for availability.
Yeah, absolutely.
That's
half my job. Half my job, I'm checking in with my contact at the insurer, and they're like, "Oh, you're number 5 now. Like we got, it's like you're waiting at the deli counter." Yeah, absolutely. And once you get to be number 1, it's like the greatest thing in the world. But then you still have your development time, and the testing. And I'm going through that right now. We have a great partner. I cannot wait. I'm not going to say any names. Can't wait to go live with them. And they have great IT. Their head of IT is amazing. But there's, you just got to go through this process, and it can still take a while. So yeah, I mean, what's interesting is most of my, I don't want to say no's, when I'm pitching, it's not that they don't love the product. It's not that they don't think they can make money on it. It's not that they don't think they can benefit their customer. It's either IT, and we can also talk about this, it's compliance. That's the other thing, right? Most carriers, they have issues in terms of dealing with their IT department and the queue there. And a lot of carriers, even though they know they can necessarily make money on something or whatnot, compliance, right? Filing. Nobody wants to file anything. Nobody wants to change anything.
It takes forever.
Dealing, especially certain states, California, the department's a nightmare. I don't care if you're listening. You guys are a nightmare. It's just, it's tough. And, again, depending on the state we're operating in with continued mobility, some states are really easy. Texas Motor Club, God bless. They make it through the Secretary of State. It's not even file and approve, it's file. They literally file the certificate. We have our license, we're bonded, it's all good. Again, California, getting a motor club license is a nightmare there. There's some other states, and then you have the non-regulated states. You have carriers who are cool operating in that non-regulated space. Some want to file through the department. Again, it just depends on how they operate, and that's, again, for me, my challenge is sometimes massaging that sort of relationship where it's like, it's their compliance, right? It's on their paper. They're the ones distributing it. So I can't tell them how to operate, right? I can only give them my opinion. I can only pitch, again, the value add, but at the end of the day, at the end of the day, they got to make those decisions and do what's best for them. And I respect that. But again, for me, those are my challenges that I deal with, right? It's IT, it's compliance. That's every day. That's what I'm doing.
Josh, very, very interesting conversation today. Thank you so much for your time. The product makes sense to me when it comes to better customer service. I've definitely been in the situation.
Who hasn't?
And I've been on the situation both sides. I've been both the car right is getting picked up by my roadside assistance or by by the tow for whatever reason, and then I need a ride. And I've also been the claims adjuster who takes that was my first job in insurance at Farm Bureau of Iowa was taking the call for the first
Wait,
time.
were you an adjuster? Or were you like the FNOL? Were you the real-time claim taker?
I started my insurance career express claims, which is the combination of FNOL and if the claim if it's a simple claim, no liability or clear liability, not a total loss, no injury, then we would keep it and work it ourselves.
Okay.
So yeah, I've had the conversation where I finish entering the information for the deer head. I'll be your adjuster. Take it to whatever shop you want to. Here's our list of preferred shops, but whatever, right? And they're like, okay, how do I get home, right? And I'm like,
good luck.
we'll pay for it, right? Like,
right.
Send the bill, however you go.
Right.
And the client has a hard time understanding that, right? So
anyone would. Yeah.
It definitely intuitively makes sense why this would be a good thing to add to a policy, and the story of the evolution of the idea and the company and the difficulties of
I'll tell you, that's been as hard as it was, right? Now that we're at scale, now that we're a profitable business, I can look back on that and I don't want to say maybe smile or laugh, or there's a lot of emotions, but when you're going through it, oh man, it is a nightmare. But again, I think, again, it's a cliche, say it makes it stronger, whatever, but it does. I mean, we learn so many lessons through these pilots, through these pivots. And now, I think we have somewhat of a finished product that is really thriving in the marketplace and continues to grow. So just keep on keeping on, man. That's what you got to do,
Fantastic. So for the listeners, in the show notes, I'll have both Josh's LinkedIn and the company website. Makes sense to me. Check it out. It might be a good thing to add to your arsenal.
Maybe.
Thank you very much for your time today.
Thanks, Tony. I really appreciate it.